I've been trading for over 8 years. I've placed thousands of trades, some of which have been multiple six figures. I've also made every mistake in the book, and I've also experienced huge losses. I've worked with people from all over the world designing trading systems that me and others have been able to use to scale up to making thousands of dollars per day. But when you're getting started, there's so many areas that you can get completely lost. So today I'm going to be boiling down everything that I've learned over this time period, and I'm going to show you things that are going to get you started trading without needing any money, how to set a goal, hit it, and build an income generating machine for yourself, and give you an actionable business plan, as well as all the tools and resources that go along with it. And if you're able to make it through this 20-ish minute video without clicking away, you're going to essentially get 8 years of experience trading information that I promise can take years off your learning curve, regardless of your current experience level. So if that sounds good, make sure you hit the like button on the video. If you like trading and investing and want to follow along with our journey, make sure you subscribe to the channel so you know when we put videos out. Also check us out on Instagram and Discord. We have an amazing trading community. So now I'm going to show you in more detail exactly what I'll be showing you in this video today. So first, I'm going to teach you only the critical things that you should be starting with so that you don't confuse yourself, the mindset required for successful trading, which may not be exactly what you think it is, how to win and lose correctly, how to build an actual trading plan, how you can start trading without needing any startup capital at all, how to actually hit your goals by reverse engineering your thought process, and then the drawbacks and benefits to having someone teach you and joining a trading community online. All right, so when you're learning trading, there's going to be a million resources online, a million people saying all sorts of different things. So trying to learn everything at once and information overloading yourself oftentimes will create more confusion and disorganization. It will sort of shoot you away from achieving a straight path to actually succeeding. What you need to learn in the beginning is a core few principles, and then you need to add based on understanding the core principles. But if you start out here trying to find this, you're just going to live out here and never get to your actual goal. So I'm going to basically explain trading as a whole, and this is something that took several years for me to actually simply understand. And after understanding this is going to allow you to fully absorb all of the other information successfully. Starting here is going to eliminate so many issues. All right, so let's take an example of a coin flip. I want you to really think deeply about this. If I said to you that for every time you got heads, I would give you $2, and every time you got tails, I would take $1 from you. Just ask yourself right now, how much money of your own would you be willing to put into this process? So depending on how you answer this question is going to sort of show you where you need to start off in the learning process. Trading is a game of probability and statistics, and I'm going to show you a very simple way to look at this. Is going to change your entire outlook. Say we're doing coin flips. Okay, you'll see here we have our heads column and our tails column. So if we flip a coin randomly, we have one head. Okay, we got another tails, 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 heads, heads, tails, tails, tails. So right there, we just did 9 flips, and you can see we have 6 times that we landed on tails and 3 times that we landed on heads. So 66% of the time we got tails and 33% of the time we got heads. So in this situation, if we lost $1 every time we got a tails, we would have lost 6 total dollars. And over here, we would have made positive 6 total dollars. So in this situation, we basically made or lost no money. And say we were to flip again and we got another tails, we would actually lose money. But the reason this is important is because of a concept called the central limit theorem. And once again, if this seems confusing, bear with me, because if you understand this, you're going to understand something that most people in trading don't even consider or realize. This is showing us the distribution of getting heads on a coin flip and the frequency in which it happens over the amount of flips. You'll see here, the frequency is extremely spread out, and this is over only 5 flips. Just like we saw in this example, we have 7 tails and only 3 heads out of 10 total tosses. But if we look at the same exact example, out of 100 total tosses, you'll notice something completely different. Now we're going to see something called a bell curve, where the expectancy over enough coin flips is going to get us closer and closer to it being a 50-50 shot. All right, and if we look at the same exact example over 1,000 tosses, you'll notice an even smoother distribution on the bell curve, showing us even more results at the 50-50 mark. So the reason this is important is because we know over time, even though on a small sample size, maybe we'll have 7 tails and 3 heads. I think everybody knows statistically, if you flip a coin, it's completely binary. You either have heads or tails, and it's a 50-50 shot. Okay, but if we were to have that in this situation, where we were to have 5 on each side, now in this situation, you have $10 on this side and only negative $5 on this side. And the more tosses that we did, did would get us closer and closer to this 50% probability, which would essentially mean that we would be guaranteed to be able to essentially 2x our money. So our job as traders is to find situations where we use things like the time of day, percent change, indicators, patterns, technical levels, where we use a software we can identify patterns to find areas, say for example, right here, based on the time of the day, other entry criteria, say I have other indicators, areas where I can buy into the market, have my expected profit target and my expected risk. So say instead of risking $1 to make $2, we're risking $500 in order to make $1,000. All right, so off of the back of that, let's go into the necessary mindset that you need to have when you're going into trading. The first big thing that I try to reinforce into people's minds is the fact that each trade needs to be considered one out of the next 100 trades. If we go back to the central limit theorem and look at the coin flip example, in the first 9 flips, we had tails 6 times and heads 3 times. So if we only had 5 flips, of course we would be nervous about the outcome of each flip because there's no way to ensure that the outcome will statistically go in our favor. If we had 200 flips, we know statistically it's impossible based off of the statistical conditions to lose money, which completely removes the stress out of trading. A lot of people always say you must have nerves of steel if you're trading, or you have to fight your emotions or manage your emotions. If you're fighting emotions in trading, you're basically executing trading completely incorrectly. Because just like the coin flip, the only stress that's coming from is not knowing the outcome. And the only reason that you wouldn't know the outcome is if you're constantly changing your rules, you don't track or know your winning percentage and how much money you're making or losing on average per each trade. So therefore the outcome of each trade makes you emotional. So each trade needs to be considered one out of the next 100 trades, not putting any significance on the outcome of each individual trade. And as long as you're following your rules precisely, this inherently will by default remove stress out of your trading. But this is why it's so important to focus on the next things that I'm going to show you in this video. The third mindset tip that I want you to walk away with, the risk that you put on each trade is the cost for opening yourself up for the potential upside of the opportunity that you know you have a statistical edge on. And the fourth and final point in successful mindset is understanding that whether you make money or lose money on a trade has nothing to do with whether it was a good or bad trade. If you tell a random person, I made $6,000 on a trade, they would say, oh, that's amazing. You must have had a great trade. That's good for you. But maybe you weren't following any of your rules. You were putting yourself at way too much risk by risking too much money. You didn't manage the trade properly, and you exposed yourself by changing all of your rules. That is still by definition a bad trade that will end up blowing you up over time, even though you made money. The same is true in the opposite situation. You follow all of your rules, you have good risk management, you enter and exit procedurally, and the outcome of the trade is a loss. If you were to tell anyone who doesn't understand trading, they would say, oh, that's terrible. What can you do next time to change it? How can you avoid this next time? Whereas the risk put on each trade, there is a certain expected amount of losses that's already programmed into the business model. And if you try to live your life changing things to try to avoid ever taking a loss, you're never going to get the consistency to keep it in the situation of the coin flip where you know percentage wise over a certain amount of trades, how many heads or tails you'll get and how much money you will make or lose each time that event occurs. So you need to focus on long-term patience, psychological control to make sure that you're strictly following your own rules and that you're working on consistency rather than hoping for luck. All right, so now let's move into how to win and lose correctly. First, I'm going to talk about how to win correctly without running yourself into a BS trap. There's a few things that we want to first switch around in your mind that took me a long time to realize because I was so focused on money. When you're trading, you're focused on money in the beginning. Here's what you really need to focus on. You need to remove the money element out of it. I'm going to show you how you can do this in a crafty way that almost no one thinks about. This is going to help you tremendously. But for now, I want you to immediately switch from thinking about money to thinking about units of risk. This is something in the trading space that we called risk factors. So take in the situation of the coin flip, that is a process. It's a very simple process, but that is a process. So we know we're going to flip the coin. We're going to get a certain expected outcome over a certain amount of repetitions. They will equal either $2 or negative $1. In this situation, the negative $1 are going to be units of risk. So if the coin flip goes in our direction, we're going to get 2 risk factors. If it goes against us, we're going to get negative 1 risk factor. And the same thing applies to trading. So in this situation, if we bought in at this level and we're risking $500, our unit of risk is technically $500, but we're considering that 1 unit of risk. And if we enter with this specific amount on this specific instrument, we know that if we win this trade, even though we're winning $1,000, that's still 1 unit of risk and 2 risk factors potentially of profit if we are right. In this situation, we go up to full profit. That's positive 2 units of risk. Okay, so this happens a lot of times in sports where say an athlete is quote unquote heating up, say they continue to make shot after shot each time. It's very tempting to believe that because of what's happened in the past, it's going to indicate what's going to happen into the future, even though we know specifically that each time an event happens, it's completely binary, meaning one or the other thing is going to happen each individual time. So say, for example, you make $1,000 here, and then you do it again, you buy again here, you make another $1,000, and then you buy in right here and you make another $1,000. Now you're up 6 positive risk factors. A lot of times people will say, I'm on fire, I'm going to risk all 6 risk factors and see if I can make 12 risk factors on this trade. And they'll start modifying their behavior, whether they're losing or winning. And both of these are falling into that hot hand fallacy. You need to make sure that you maintain poise and that you're not basing your decisions off of what's happened in the past and thinking it's going to precurse what's going to happen into the future. And the same thing is true in the opposite direction. If you're taking loss after loss after loss, thinking that, oh, I should double up my size because I've had 3 losses in a row and I'm unlikely to have another one, things are going to turn around, or I'm going to start dropping my size down because I keep losing. These types of mindsets where you're creating a ripple effect by changing the things that you can maintain as constants is going to throw your entire process off, the same way it would throw our entire process off with the coin flip if we were to say we're randomly going to take $5 away from you or $10 away from you if we get a tails outcome every 3rd coin. Is going to have a ripple effect and can screw up so much in your trading process. So when you're losing, you need to make sure you consider it opportunity cost and that you don't change any of your behavior emotionally because of the losses. All right, so let's get into section 5 now, and I want to talk about how to build an actual business plan around trading. Trading is a business, and if you don't treat it like a business where you're calculating things, monitoring everything that you should, you'll essentially turn into a not successful entrepreneur where you don't track anything, you really don't know what's going on, and you have no starting point on how to fix things that are broken because you're not tracking anything. You need to have a business plan the same way Apple has accounting teams, optimization teams, managers, supervisors, CFOs, CMOs, advisors. All these people are looking at the infrastructure of a well-oiled machine, and if you don't treat your trading like that, you're just going to piss money away. Here's how to build a trading business plan. Now, there's a tool I'm going to show you after this that puts this more into practice, but for now, I want to go over the framework. So like we talked about with the coin flip, have to come up with a trading strategy. So you need to observe something that's happening repeatedly in the market. Okay, so say for example, every time you got an oscillation with a sell side indicator, you would take a short position and then you would get out when you saw the opposite side indicator. Say this would give you, for example, 15 risk factors. You notice you want to buy each time you get these signals. This is going to be your repeatable process or your observation on the chart. Then you need to make sure, just like with the $2 to $1 reward on the coin flip, that we're defining our rules. We define the rules of that scenario. Now we're defining the rules of our own scenario. In the market, there's infinite ways that you can start trying to make money. You have to be willing to regiment yourself and set up your own rules. Otherwise, the sea will swallow you up and you'll fall into the abyss. It's crazy out there. You have to put the structure. Then you need to evaluate the outcome. So like we were talking about in the coin flip example, we know over a certain sample size, we're statistically going to get to that 50 level as we increase the amount of flips. And if we have a 2-to-1 risk reward ratio, that is going to put us in a profitable situation. Okay. Even if we found a situation that only happens 20% of the time, but we can make 5 times the amount that we're risking, when it does happen, we can lose 80% of the time and still be profitable. This table is essentially all you need to use as your guiding light once you do find your process in the market to see if you want to then test it over enough examples with your defined rules in order to evaluate the outcome. And you're looking at the winning percentage and the average win or loss on each thing. All right, so once you have this outcome, now I'm going to show you how you can start trading without requiring any money. And this is what you should be doing before you put any money into the market at all. One of the bigger issues, people want to immediately get into the market and start playing around or start trying it out with money. That's like trying out a business when you have no idea what you're doing and investing $5,000 into a shoe business. You don't know anything about shoes. You don't know how you're going to sell. You don't have any business model and you're just expecting to make money from that. Why would you not want to test it out first? With trading is the only business where you can actually have the data, test out how it would work beforehand. Then you just have to do it into the future. You already have your proof of concept. So first thing that you're going to do once you have this idea in your business model is you're going to look on the chart at examples. Okay, so like I was telling you, we look on the chart for situations where we would buy and sell. We're going to evaluate that data. I'm going to show you how to evaluate in a second. Next thing that we're going to do is test out our decision making and our rules in real time by using something called replay. If you're trading, you're probably using TradingView. Okay, I do have an affiliate link below this video. If you want to join, quick tip, wait for Black Friday. It's coming up. You can get 70% off the annual subscription. So just make sure you wait. If you save money and you appreciate it, use the affiliate link. All right, but on TradingView, we can click on this replay button and you'll notice if I click on this menu, we can go to a random bar. We can go back to a time on the chart where we don't remember what's happened. Okay, and now we can play this forward, pause it, test out our rules. Say we wanted to buy in at this point. This isn't a real trade, but just to show you. And then say, for example, almost got us out for profit, full loss. Okay, so for example, you took a loss on this. Now you're using replay. The next thing that you do is once you have all this information, you're going to do this on paper. So you're going to use whatever exchange, whether it's a prop firm or an exchange, you're going to test this out in a simulated environment, but actually executing the orders and see how you would do over time. How would your business model perform? I'm going to show you the tool now. It's also going to be in the description of the video for completely free. I built this out on Notion for you guys. Next thing that you're going to do, each time you do this process, you should be tracking information about each flip or each trade. So you can go and you can click add new cell here. You can add the number of the trade, the date. This is the trade tracker that I use, that I give to you guys. You put the day, what you're trading, the system type, the time frame, all the information, whether it's a win or loss, and you can see all of your information. This is going to give you a snapshot of how you've actually performed over a simulated range or a real range to show you where to improve things. And you can actually filter based on the wins, the loss, and you can look at all of your things simultaneously. A cool part about this, I can open this up and I can just drag a screenshot into here, and now I'll see specifically what I did on the chart in reference to all the data. And this is an extremely good way to keep yourself organized. Okay, once you have your business plan and you have all your rules set, I've also designed this sort of streamlined process to follow each day. So you'll notice something to do in the pre-session. You can click on your pre-session notes. You can add to this checklist. This is going to populate all the steps of your process, right? You can check these off and you can follow along as you go. All right, same thing for the trading sessions. Set this up so you can hit next session and it's going to populate the list. You can update this and customize this however you like. And you can follow this process throughout the day to actually quantify your data. Okay, and once you have this proof of concept in your business model, this is where you're going to apply it to an actual account. This is where you're using a prop firm or using an exchange to be able to actually put money behind this, follow your business plan, and scale your accounts. This is exactly what we're showing to our team too, where we have members winning 14 trades in a row, scaling 5K into their accounts after 60 days. Okay, sometimes scaling thousands of dollars out of each trade. These are the things that we're focusing on, not just making discretionary decisions and trying to put money behind it and having no idea what you're doing. That's how you lose. That's what a lot of people spend years doing. I spent years doing that. I'm trying to help you guys not do that. If you're still here, make sure you hit the like button. Fucking hyping myself up here. All right, let's talk about the next step, which is actually achieving your goals. And the way we're going to do this is by reverse engineering our success. Now, in trading, you really do need to sort of rewire your mindset in order to win at this game. I'm going to explain to you exactly how you can figure out how to get to your goals without driving yourself into a downhill spiral and never achieving those goals. All right, so whenever we have a big problem, the most logical thing that we're told to do is break it down into smaller steps in order to achieve this collective goal. That's sort of what people are taught to do from being a kid. You have a problem, you break it down. Say they want to make $5,000 in a week. They'll look at this and say, if I want to do that, that means that I now need to make $714 per day in order to hit over 7 days that $5,000 goal. That's great. But here's where this starts to go downhill. So for example, say the first day you lose $200, but now you need to make another $714 plus recoup the $200 that you just lost, in addition to having to make another $714 just to keep up on pace to hit your goal. So now in order to try to chase after that goal, you're going to start acting differently on the charts. You're going to put on more risk. You're going to take more trades because you're trying to keep up. And this is going to have that ripple effect where you're changing your underlying process. So here's how we can completely avoid that and how we're going to hit our goals, but we're going to do it in a really, really smart way. Okay, this is a big breakthrough that I had, and I'm going to share it with you guys. What we're going to do is we're going to take the dollar amount that we want to make over a certain amount of time. So say, for example, we want to make $5,000 in 1 month. Okay, that would mean that each day on average, we need to make $166. Remember, we were talking about the risk factors of our process. What we need to do in this situation is figure out if we were to trade our rule set for 30 days, what's the average amount of risk factors that we're expected to make, not the amount of money or whatever, how many risk factors do we make over that time? As soon as we have that information, say for example, we have 15 risk factors over 30 days. Then we're going to take the dollar amount, which is right here, and divide that by the average amount of risk factors for that period of time to get the dollar amount that we need to risk per trade. Okay, so in this situation, our result that we want is $5,000 in 30 days. That means that if we risk $333 per day, all we need to do is focus on system-based goals. So keeping that process, that coin flip with $2 of reward and $1 of risk as consistent as possible, focusing on keeping this risk as close to 333 as possible. And if we do those two things based on all of our testing, by default, you're going to get the result without having to focus at all on the $166 per day. That number is now completely out of the window, and it's going to take you away from reacting emotionally and inevitably putting yourself in a position where you will make mistakes. This is something that I chased for years and is not going to end good for you. All right, so take this example. If I wanted to buy here, risk $333, we know the exact quantity that we need to enter the market in at this specific point, so that if the market does come down and trigger this level, we're risking exactly $333. That doesn't even look like threes, but you get the point. And also, in order to properly calculate this full take profit level. So the adherence to the rules, making sure that the risk stays uniform and not reacting emotionally, is going to allow you to go through this entire process and put yourself in a position where you can treat trading like a business and be able to scale up to making thousands of dollars a day, hitting your goals and getting paid, which is what we all want to do as traders. The last thing that I want to talk about is mentorship trading communities online. There's tons of discords, there's tons of areas, tons of information flying around, some bad, all teaching you trading. Sort of up to everyone to sort of determine. From an unbiased perspective, I just want to say this. What you should be doing is focusing on simplicity and understanding that trading is a zero-sum game. As much as it's good to work with people and learn from people, there's also going to be other people that can confuse the process, that can give bad advice and ultimately lead to bad results. So you have to be very careful about how you choose. The way we try to do it is surround ourselves with people who truly understand these fundamentals and aren't loose cannons talking all crazy. Everybody has proof of concept, has earned their stripe, and knows what they're talking about, where it's entirely an uplifting experience. But be careful of those things. I remember being in chat rooms when I was first learning, and you'd hear all sorts of things that would change your emotions or make you believe certain things. So be careful from that. Be careful listening to too many things at once. Make sure you're crafting trading around you as a person, because it's a very personal game. You're essentially building your own personal business inside the markets. So what I try to do is aggregate all the information that I've learned over this time and set people up to be able to be at an advantage. But ultimately, there are pros and cons of that process that need to be handled correctly. But on top of that, I want to outline as much information as possible so that people don't get confused, people don't get steered wrong, and have the best chance to be able to figure out this process and scale up your own income generating machine so that you can go travel the world, you can make the money that you want and have the freedom that you want. Now, if you're still here and you feel like this video was worth staying for, make sure you let me know in the comments, because I'm going to read through them. Okay, make sure you like the video if you appreciate this. I really tried to just pour my heart out and give you guys information, because I think that I can help expedite everyone's learning curve in the game of trading. All right, here are some videos as promised, guys. Make sure you subscribe to the channel, take advantage of the resources in the description, and until next time, guys, I will see you all in the next video.